Hi folks, Hector here. Today is Friday, the 18th of April 2008. In today's video, I want to review a trade that was sent to me this morning by Tim from England. Tim is one of the guys who took my trading course actually a few months ago, quite a few months ago actually. He took a long entry on the euro against the CHF. He made some pips. I think he made about 40 pips this morning, and well, he sent me an email. He wanted to get my feedback, whether I believe it was a good trade or not. And my answer was that it was a risky trade, but it was also an intelligent one. And well, I've decided to review that trade for you guys here on today's video, because I think it is indeed an interesting trade. So I think it might be worth so we all, share it and perhaps comment it here on the blog. All right, like I said, it was a long entry on the euro against the CHF. As I was saying yesterday on the video, the euro against the CHF had been trending down for quite a while, actually ever since the beginning of the year. But it was also showing some signals of weakness. I was commenting yesterday, on yesterday's video, about this breakout pullback continuation pattern, which is, well, nothing but the confirmation from a technical point of view of the breakout of this trend line. Okay, the one that's marked in blue in my screen, as you can see. This breakout is certainly identifiable with this breakout thrust. Then we have few consecutive bars in red, retesting the trend line from below. The bears failed to continue pushing price in the direction of the moving averages, and from that the bulls come in place, score a new high right there, and therefore this whole pattern confirms the breakout of this downtrend line. Okay. Moreover, today, while we've touched the 100 moving average, a simple moving average, we've already matched or almost matched the previous swing high, etc. So as far as I'm concerned, we are downtrending no more. But anyway, like I said, this downtrend was certainly showing early signals of weakness, and what Tim did was actually zooming into the shorter time frames in order to try to squeeze some profits from an intraday point of view out of this breakout thrust. Okay. So basically what he did was spotting this breakout pattern. He zoomed into the shorter time frames, in this case the hourly. Okay, and okay, there we are. Let me zoom out actually a little bit more. This is the massive breakout pullback continuation pattern I was just showing you before on the daily time frame. Okay, that's what it looks like on the hourly. Now let me scroll to the right end of the chart right there, and Tim basically what he did, he was seeing the moving averages pointing up in the shorter time frames. That means that the shorter time frames were not downtrending anymore. The retracement had broken through this trend line, and they were now showing an uptrend. Okay, have a look at how they are, all of them shaping up to the upside. Plotting to the upside, pointing up parallel to each other, etc. And indeed, throughout the last few days, well, we've clearly seen, price scoring higher highs and higher lows. So what Tim was spotting was basically a flat top triangle price pattern right there. Okay, basically the 160 below level had been working as support all day long yesterday, forming a double top, whereas we were making higher highs. Okay, so effectively what we had is a textbook flat top triangle, being the 160 below the key level to keep an eye on today. I always say that no matter what time frame you trade, it's important to keep an eye to determine what's the key level to follow for the day, the key level to focus, and whether to monitor whether that level is being respected, whether it rejects price, or whether price actually breaches through. All right, that key level was indeed yesterday's high, the 160.00 once again, and team, well, basically traded the breakout of that level in the direction of the moving averages, in the direction of the intra-week trend. Okay, always trading in the direction of the trend. I mean, like I said, he took my course, and I always say that if there is no trend, there is no trade. So he was trading in the direction of the intra-week trend, and well, he made about 40 pips out of this run, somewhere around there. Okay, I don't know the exact entry and exit levels, but I know he traded the breakout of that 160.00, so he might have scored 40 pips somewhere around this part of this move today. Okay, so basically what he did was spotting the weakening process we've seen throughout as of lately on the daily time frame. He figured that this trend was indeed weakening, and rightfully so. Okay, at the end of the day, we have this breakout pullback continuation pattern there, and moreover, now we have the 30 moving average now pointing up. Okay, the 50 is flat, so you know, this downtrend was certainly weakening. He zoomed into the shorter time frames, in this case the hourly, and he wanted to spot a long a long trade, a long opportunity from an intraday point of view, and well, that's where his opportunity came in place. So in one hand, it was a risky trade, as I told him this morning, because well, at the end of the day, I mean, being honest, he was trading against the trend. Okay, the price is still scoring lower swing highs and lower swing lows, so yeah, we can certainly establish that this was a trade against the long-term trade, but it was a smart trade, okay, an intelligent trade, because he was spotting these weakening signals, okay, these early signals that, you know, this downtrend might go belly up very soon, and in fact it has. Okay, now it's touched the 100 indeed. So he decided to jump on board rather earlier, okay, and you know, after having spotted the breakout, he zoomed into the short time frames, and at the first chance of entering long against the long-term trade, that's why it was a risky trade, but I think he found a rather, despite the extra risk that this trade was carrying, I think he found a rather interesting, a rather smart level to enter, and you know, well, to squeeze some profits. I had interest in reviewing this trade because it is a valid trading strategy. You follow it's what's usually called a breakout trendline breakout type of trading. You basically have a very clear trend, such as we did in this case on the daily. Price is swinging of it, okay, and once the trend line gives way, you zoom into the shorter time frames and you try to exploit the we usually get a momentum move up on a breakout due to two reasons. Okay, firstly, a stop loss run. Okay, most of the people trail their stop losses right behind the trend line. Once the breakout takes place, all those stop losses are being triggered, and therefore price is propelled to the upside in momentum. And second, at the end of the day, trading is a psychology thing. It's a mass psychology game, and well, all the people that wanted to long the euro against the CHF were waiting for their chance to enter long on this market, and basically that chance, that signal came as the trend line gave way, and therefore therefore pushing price to the upside even further. So in one hand you have two elements: stop loss being run, and therefore accelerating price to the upside, and therefore the people that wanted to enter long on this trade, on this market, they had the green lights, the thumbs up to enter long, to trigger the long entries, and therefore the acceleration is actually twofold, twicefold, doublefold. I don't know how you say that. Twofold. It's double powerful. Okay. And that's what Tim did. Okay, he spotted the breakout, he zoomed into the shorter time frames, he waited for his entry signal. We had another entry signal right there a few days ago as the 159.50 level gave way as well, and moreover we did today at the 160.00. That's what Tim did. that's how he made his money. Risky trade, smart trade. I like it. I do like this trade, so I thought it was worth reviewing here on the blog, reviewed here on the blog for all of you guys to see. All right, that's all. Bye bye.